Hello everyone and welcome to today's training on underwriting. My name is Jamie. I'm the supervisor here of the applications department. So today's training is really going to be about understanding how the underwriter is making their decision to either approve, pend, or decline the applications that you are sending in. I want you to get in the mindset of an underwriter. That way when you're with a prospective merchant, you know the right questions and information to get in order to make your application submission smooth and go straight to an approval. If you have any questions at all, please submit them in the question box and they will be addressed at the end of the training. So for today's agenda, we will be discussing the underwriting concepts, having a complete application package, how the review process is performed, and the communication of that process. So first, we'll talk about the three main fundamental concepts behind an approval decision. Do we have a complete application package? Do we have enough information based on the risk level of the business? And is that information that we have accurate and does it make sense with the business type? The first step in getting your new application reviewed is to make sure it is complete before you send it in. I'm just going to touch on some general important topics of the application. We do have a full application training, which will go over in detail how to fill out the application. You can find that training on Epic. When filling out the application, make sure to include all of the business information as well as the signer's information. This includes names, addresses, phone numbers, the signer's date of birth and social security number. A common mistake I see is skipping the tax ID number for sole proprietors. Many sole proprietors do use a separate tax ID number for their business, so make sure to always ask when you are with the merchant. If this is blank or the signer's social security number is placed there by assuming it's always a social security number, this can lead to backup withholdings by the IRS, and the merchant definitely does not want that happening. You will want to make sure you have the merchant sign everywhere that is required. There is one signature on the first page and two signatures on the second page. The merchant is also required to initial the bottom right corner of the first page of the application, so make sure not to miss that. And don't forget to sign yourself at the bottom as well. Make sure the application that you are completing is on the current version. You can find that version on the bottom of every page. Our current version is US 11646. When we do release a new version, we will always send out a notification beforehand. So the rates page is on the screen now. That must always be completed. Another common error I see is leaving the Visa, MasterCard, Discover, offline debit discount rate blank. That's the second one on the page. This is the rate charged to all debit cards swiped without a PIN number. The card is run like any other credit card, so if you leave the fee blank, the merchant's not going to be charged for any of those transactions. At the bottom of this page is where you'll find the other two signature areas. Every application must always be submitted with a pre-printed voided check or bank letter. Starter checks are not valid. If you do have a starter check, you can find a starter check form on Epic. You could submit both of those together and that will be acceptable. I do also want to mention quickly, always make sure to include your ISO cover sheet. This tells us how to pay you, and I know everyone here wants to get paid. There are also 3 pages of terms and conditions as part of the application. Make sure to give these to your merchant. I would recommend even having them initial the pages and then sending that over to us. That way, in case there's ever an issue that comes about that's covered in the terms and conditions, we have something to show them that they did see those documents. Now that we have our complete application package, we'll get started on the review process itself and what the underwriter is thinking about. The main idea of underwriting is risk as well as complying with the federal regulations governing the industry. Even those regulations, they were all created to limit risk. So we have three main risk categories. They are pretty straightforward: low, moderate, and high. Then there are the declines. The review process is ultimately a puzzle. So we have all of the pieces. Do the pieces make sense, and do they all fit together? On the screen here, you'll see the 6 main pieces that we look for when we see every single application. This is regardless of the risk level. First, I'll talk about the doing business as, or DBA, legal and signer's information together. We need to see that this business is real. Every account needs what we call PODB, or proof of doing business. You'll see that acronym commonly. So pretty much we're acting as the customer. What do we see? Is it a storefront? Is it a website? Is it a plumber coming to do a repair on my sink? How did I find him? Can I see that that business is located at the address provided? The underwriter will look for a proof of doing business, which most of the time they can find themselves. When a business is new, we may have a harder time finding proof of doing business, so I always suggest taking a picture of the storefront, including the sign and store number, or they usually have a business license hanging in their store. Whether it's new or not, take the pictures to be safe. You can find a listing of everything you could send in as proof of doing business on Epic in our product library. The legal information. This is a little more straightforward. It's the name that they use for tax filing purposes. For the most part, the underwriter can always find the proof of this legal name. We'll look on the Secretary of State for that specific merchant. In the case the underwriter cannot locate the legal information on the Secretary of State, they will ask for proof of legal, which would be any document from the IRS, such as an article of incorporation. Again, it's very important that this information is accurate to avoid those backup withholdings from the IRS. The signer's information. We will run the information provided against the credit report to verify all information provided matches and is correct. If this information does not match, or we were not able to get a hit on the credit report, a driver's license will be requested as proof of signer. So this is how we verify the doing business as, or DBA, legal and signer's information. This goes for all accounts, like I said, regardless of the risk level. It is also required by federal law. KYC, or Know Your Customer, is the specific regulation that governs the entire financial industry. Now we can go to discuss the type of business, processing profile, and volume. This is what classifies the account to a specific risk level. Some examples of low-risk accounts would be restaurants, hair and nail salons, convenience stores, pretty much any business that has a low average ticket and is mainly card-present transactions with little to no future delivery. After reviewing all of that information on the business and signer, the type of business, volumes, the underwriter will ask, does it all fit? Let's say we're looking at an application. The doing business as name is Joe's Pizzeria. The goods and services on the application states restaurant or pizzeria. The average ticket is stated as $15, and 90% of the time the card is present and swiped. There was a picture in the application of the storefront, and they found Joe's Pizzeria online at the address listed on the application. Everything makes sense here. We have a complete application package, and now it's good to approve. Now let's say we have that same doing business as DBA name, Joe's Pizzeria, but the average ticket says $300, and the cards are only swiped 30% of the time. Right there, something's not right. It doesn't make sense for a pizzeria. The pieces aren't fitting together. This is when the underwriter will come back with pending questions or request additional information. Just keep in mind that there is no one-size-fits-all profile of what would make an account low, moderate, or high risk. We are now moving up the risk ladder to moderate risk. We still require everything that was just mentioned for low-risk accounts, but now we will add more pieces to that puzzle. The underwriter will now take a closer look at the credit report and consider the score and any collections the signer might have. The underwriter will also consider the time in business. Is this a well-established business with good track records, or is it a startup company? 3-month processing statements will be requested if not already provided. All of this additional information will assist in making the decision to move forward with the account. So what makes an account moderate risk? This could be anything from the business type. Some businesses are just riskier in general. The processing profile, the more MOTO or mail order telephone order, e-commerce transactions, the greater risk for chargebacks. Ticket sizes. If the average ticket is $1,000, that'll make an actual chargeback more substantial than one of $20. So what is an example of a moderate risk account? A wedding dress boutique. Why? The dresses are most likely all future delivery. The average ticket tends to be higher, more around $500 to $1,000 range. It is common for people to change their minds about the purchases and want refunds. If this happens months after the initial purchase, before the item is received, this could result in issues between the customer and business. This leads to chargebacks or refunds provided months after the sale. Can the merchant support the refund that month? We're now moving up the risk ladder again to high risk. We still require everything that was just mentioned for low and moderate risk accounts, but now we'll add even more pieces to that puzzle. Bank statements will now be requested and reviewed. Financials, such as tax returns, could be requested and reviewed. Additional proof of doing business. Even if we find their business information online, we may request additional documents such as customer contracts which show the company's policies. We will also have higher standards for the merchant's credit. What would make an account high risk? The same type of things that we saw previously for moderate risk, but on an even greater scale. Again, some business types are very risky. The processing profile. 100% e-commerce sites, which are just full websites. It's common to find anything from fraudulent sites to websites that are fronts for anything like illegal pharmaceuticals. Ticket sizes. If the average ticket is above $1,000, again, that will make an actual chargeback a lot more substantial. What is an example of a high-risk account? Moving companies. Why is that? Chargebacks are common in the moving company industry. Customer belongings get damaged in moves. This creates conflict between the merchant and the cardholder. The average ticket tends to be much higher. For companies that move you from state to state, that could be anywhere from $4,000 to $5,000. A lot of these transactions are card not present and future delivery. There are certain business types that go beyond high risk and are actually prohibited with the bank we most commonly use, such as pawn shops and gentlemen's clubs. We do have a secondary bank that these business types can be submitted to. That would be Wood Forest. If you have any questions on our secondary bank option, please ask us here at the applications department. Now we come to the communication and flow of the new submissions. When you have a new deal to submit, you can either submit it via ticket in Epic or send an email to the applications group. That email address is applications@evoplatinumservices.com. After an application has been reviewed, if it needs more information, it will move to a pending status. A ticket will be created in Epic by an EPSG application team member. This will show on your Epic account. An email prompt will also be sent to you when the application moves to a pending status. You can send back the information needed either in the open pending ticket or to the email mentioned before. When the application reaches an approval status and an MID has been issued, Epic will be updated and a notification will go out to you as well. The green tabs at the bottom of the screen are the status queues in Epic, which you can follow on your application submission. Accounts can occasionally be approved on a contingent basis as an exception for non-risk related items. When a contingent has been granted, the ISO has 30 days to provide the information. If that information is not received within the 30-day period, a fee of $15 a month will be charged to the ISO's residuals until that information is received. And also, I just want to note, if you receive a conditional approval on an application placed with Woodforest, that's our secondary bank, the ISO has 15 days to return the items needed. If the items are not received in that time frame, they will close out the account. So now I want to open it up to any questions you may have. You can please put them in the comment box now.